Gold's not just a shiny metal, it's protection against inflation and market crashes. But don't buy physical bars, as it's too risky and outdated. Here's how you can invest in gold, the smart way. Start with gold ETFs, exchange-traded funds that track gold prices. You're not buying physical gold, but you get exposure to its value. Low fees, high liquidity, and zero storage hassle. Check out SPDR Gold Shares, iShares Gold Trust, or Nippon India ETF Golds. Then there's gold stocks, shares of companies that mine or refine gold. These offer higher potential returns, but also more risk. If gold prices rise, these stocks can outperform. Think Barrick Gold, Newmont Corporation, or Agnico Eagle. Want to go digital? Digital gold lets you buy small fractions of real gold stored safely in vaults. No delivery, no storage worries. Just tap and buy. Platforms like SafeGold, MMTC PAMP, and Augment are India-based leaders. Now, where do you invest? Use trusted platforms like Groda, Upstocks, and Paid Money. These apps let you invest in ETFs, digital gold, and even stocks, all in one place. Quick tip, diversify. Don't put everything into one format. Mix ETFs for stability, stocks for growth, and digital gold for convenience. So that's basically how you can invest in gold. And that's it for this video. If you find this helpful, consider subscribing and giving this a big thumbs up. Thanks.